Hello friends, I am CS Jasmine. Welcome back to my channel. If you're new to my channel, I make educational videos helpful for commerce students for 11th, 12th and students pursuing CA, CS and CMA. So today I will be teaching you the basics of accounting. Before proceeding further, if you have not subscribed yet to my channel, so please subscribe the channel, like, share and comment. Now, starting with what is accounting or definition of accounting, it is the art of recording, classifying and summarizing in a significant manner and in terms of money, transactions and events which are in part at least of a financial character and interpreting the results thereof. So first of all, we record all the transactions in journals, whenever they are happening. The first thing done in accounting is recording. Then you classify them. You classify them in ledgers should be where they should be classified, right, and summarized. Then further we summarize them in a significant manner and in terms of money, transactions and events, which are money also in accounting plays a very important role. The transactions should be, at least in part, they should be in terms of money or financial character, and then from all those things you interpret the results thereof. Results are like whether the organization is in profit or in loss, right? These are the results. So this is how we talk what is accounting. Now I will tell you the stages of accounting. What are the stages of accounting? So the first stage is the transactions of a business that have, at least in part, a financial character are identified and recorded. First of all, any transaction happening in the organization that is identified and thereafter recorded in the books. Then the recording is done in a manner which identifies the different classes and types of transactions. Once you record them, they are recorded at one place only. Then you have to classify them, you have to identify them, that which under which classes they fall and what are the types of transactions. And the third stage is the resulting records are summarized in such a way that the owners or other interested parties in the business can see the overall effects of all the transactions. Then they are summarized and they are interpreted in such a way that whatever the owners are, or whatever the interested parties like creditors, debtors, shareholders and all the interested parties, they should also know that what were the overall effects of the transactions, whether the organization is in profit or is in loss, or whether they are earning good, they're getting their return from the organization or not. So these are the three stages of accounting. Now, accounting is further classified in some branches. There are three branches of accounting. The first is financial accounting. It is concerned with record keeping directed towards the preparation of trial balance, P&L account and balance sheet. This is the form of accounting. In normal words, when people say, okay, accounting, the thing comes in our mind is financial accounting, the things which are related to finance. Simple financial, you have to keep the records, then the transactions are recorded, then further they are classified, then they are summarized and interpreted in the forms of trial balance, P&L account and balance sheet. That is called the financial accounting, which is the major part of accounting. But it is not just financial accounting. There are other branches also, like cost accounting. Cost accounting is the process of accounting for costs. Yes, for which we have cost accountants also. Cost accounting is very important. When a business is started, or when the business goes on, whatever the things we are doing in the organization, the processes we are applying, or the things we are purchasing or we are selling, or the costs that we are incurring, everything has to be recorded in a way to keep the records. And also, why do we need cost accountants, or why do we need cost accounting? It is very important to understand what is the relevant cost, what are we going to do if this doesn't happens, what will happen and what will be the cost of that. Everything depends on the money of the organization. So how to use the money in minimum cost? You have to generate maximum results or maximum profits and minimum cost. So for that we need to have a very good knowledge of cost accounting. Then only the organization can take benefit from it. Then the third branch is management accounting. It is concerned with the supply of information which is useful to the management in decision making, increasing efficiency of business and maximizing profits. What is management accounting? Whatever the information which is useful to the management that is being supplied to it, then only it can make good decisions, then only it's useful for decision making, increasing the efficiency of business and maximizing profits. So these are the three branches of accounting: financial accounting, cost accounting, and management accounting. Now, what are the functions of accounting? The first function is keeping systematic records. Accounting is done to keep a systematic record of financial transactions. Why are we even doing accounting at first place? We are doing it to keep a systematic record of financial transaction. It's not like yeah, आज कुछ खरीद लिया, आज कुछ बेच दिया. So we are not taking the record of everything. Even a layman keeps a record of his money. So you need to make a systematic record of money, that whatever you are buying, whatever you are selling, or whatever financial transactions are going on, you need to keep a systematic record of that. The second function is protecting and controlling business properties. Now it ensures no unauthorized use of any assets or property belonging to firm. It's not like that, okay, fine, now the firm has this property, that property, we're selling it, we are purchasing it, we are doing things without telling the shareholders or the owners. So that is not correct. That is why the firm can see that all amounts due to it are recovered in due time, and that no amount is paid unnecessarily. Whoever our debtors are, they are paying on time and they are paying properly. That has to be looked after through accounting. And whatever we have to give back to the creditors, that also you have to look, and these functions can be taken up only by proper way of accounting. The next function is ascertaining the operational profit or loss. Accounting helps to determine the results of the activities in a given period, usually a year. Again, why are we doing it? We record, we summarize, then we interpret. When you will interpret, you will come up with operational profit or operational loss, whatever the accounting is. Through accounting we will get to know this, that whether the organization is having profits or is having loss. And usually the period is usually a financial year. Then at the end of the financial year the P&L is made, and then it is ascertained that whether the organization had profit or the organization had loss. The next function is ascertaining the financial position of the business. It's not just P&L. After P&L, balance sheet is made, and that is made to ascertain the financial position of the firm, to know what assets are there, what debtors are there, how many creditors are there, what is the capital of the organization, and a lot of things we get to know from balance sheet. That is why it said that balance sheet tells the financial position of business. That is why the balance sheet is made. And the next function is facilitating rational decision making. Accounting facilitates collection, analysis, and reporting of information at the required point of time. So it's very important that it facilitates. Rational means correct. Rational means sensible or logical. So it's very important that accounting helps to come at the decisions which are logical enough and which are beneficial for the organization. So these above are the functions of accounting. Talking further, the advantages of accounting. What are the advantages of accounting? The first is maintenance of business records. Now, all financial transactions are recorded in a systematic manner in the books of account. Definitely, I'm telling you again and again, they're recorded, they're classified, they're interpreted, they're summarized. So what happens that everything is getting recorded in the books of accounts. You should know whatever is happening in the business, that is being recorded. So that is very advantageous for the business, that it helps in maintaining the business records. Then the next advantage is preparation of financial statements. Now proper recording of transactions facilitates the preparation of financial statements. How would you make financial statements if you don't know what happened in the organization, what things we sold, or what we purchased, or whatever transactions happening in the organization? For that we need a proper record of transactions. Comparison of records, very important again. Accounting information, when properly recorded, it can be used to compare the results of one year with those of earlier years, because every year we are making the statements, we are making the results. So if you're making today's results and you see that, okay, I have incurred some so and so loss, you can compare it with the last year. if you had profit, what were the differences, or what happened wrong, or what were the things that got up and down that suddenly the firm uh, dipped in loss. So for all those things, and to know which thing increased, which thing decreased, whether any costs are increasing or some revenues are increasing, for all those things we need to compare the results or compare the statements. So for that, accounting helps in that. The next advantage is decision making. Accounting information helps management to plan its future activities by preparing budgets and coordination. Now, if you can make comparison, if you can do all these things, you can even make the budgets, right? From previous year's statements, you can budget that, okay, by the end of this year, I will reach so and so by giving reasonable fluctuations to all the things. For that, for proper decision making, you should have proper accounting. Then only you can make proper budget, so you can coordinate properly for the future activities. For that, you should have proper base, a proper accounting system. The next advantage is evidence in legal matters. Now, properly recorded accounting information can be produced as evidence in a court of law. If you face any case, or if somebody sues you, if you have proper accounting records, you can just go and show it to the court that, see, this is what I did. If somebody is alleging you for some wrong and you've not done it, you can use it as an evidence in legal matters as well. So there it is very useful. The next advantage is provides information to related parties. All the interested parties can get financial information about the organization. Shareholders are investing. How would they know that what are you doing, or how would they know whether they're earning profits or not, or they will get return on their earnings or not? Or what are the distributors? How would the distributors know, the suppliers know, the creditors, the debtors, the owners, everybody, all the interested parties, they get all the financial information from a proper accounting system only. For that, it is important to have a good accounting system in the organization. And the next advantage is helps in taxation matters. Now, income tax and sales tax authorities, they depend for taxation matter on the accounts maintained by the business only. How would they know what you did for the whole year? How would they know what are the sales you are taking place? Or how would they know what is the income, what is the profit, what is the loss? For all those things, a proper accounting system is must for the business. The most advantageous point of accounting is it helps in valuation of business. When the business is to be sold, the accounting information can be utilized to determine the proper value of business. When you're selling the business, how would you know what money are you going to get from your purchaser? For that, you have to show him that whatever the accounting information you have, whatever the assets you have, whatever the liabilities you have, then only you can value the business. And then if he agrees to give the goodwill as well, he will have to give that. That is the proper valuation of business. For that, you should have proper accounting information. Then only you can get a proper money for your business, a proper value of your business. The next advantage is replacement of memory. Yes, no need to remember transaction as it is recorded. Can you remember all the transactions? A human being can remember for whole of the financial year what we did, what we bought, what we sold. That's just impossible. So these above were the advantages of account. Now comes the limitations of accounting. What are the limitations? The first is accounting information is expressed in terms of money. Yes. So the events are of financial nature and non-monetary items or events are not recorded in accounting. The events, whatever the events are, they all are of financial nature, and non-monetary items, they are not recorded in accounting. They are not valued for the compliments or for the good initiatives, what the organization did, what the management did. That is not recorded anywhere because that is not expressed in terms of money. Whatever will be recorded, that should be in financial nature and expressed in terms of money. The next limitation is accounting information is based on estimates. Now, some accounting data are based on estimates may be accurate also. It can be accurate, but there is some accounting data which is based on just the estimates. The next limitation is accounting information may be biased. Accounting information is not without personal influence or bias of accountant. Whatever the thing is carried by a human being, is never away from being biased. Everything can be biased. So in the same way, accounting information, because it is carried by the accountant, it will have his personal influence or biasedness, so it may be biased. The next limitation is fixed assets are recorded at the original cost. Balance sheet may not show true and fair view of the financial position. Now, all the fixed assets in the balance sheet, they are recorded at their original cost. They were bought 5 years ago or 10 years ago, but they are recorded at the original cost only, which is not right. In today's era, whether that fixed asset even exists or not, or what is its real cost, that is not presented in the balance sheet. Balance sheet is taking up the old original cost only. That makes the balance sheet somewhat ambiguous and somewhat vague, because it is not showing the true and fair view of the financial position of the organization. Next is accounting can be manipulated. Yes. So accounting information may not be used as the only test of managerial performance. There are other things also, and it cannot be it can be manipulated. The next limitation is money as measurement unit changes in value. The value of money does not remain stable, so the accounting information will not show true and fair results, as I told you in the first limitation only, that all the financial transactions are recorded, all the transactions that can be expressed in terms of money are recorded. So you have to know that money as a measurement unit is also changing in value, because money also has a what we call time value of money. It keeps on changing. Like earlier, what was the value of 100 rupee? Would the value of 100 rupee, if you compare from the earlier times to now, it has reduced a lot. So the value of money never remains the same. It keeps on fluctuating, and the accounting information is all in terms of money, so it is not showing the true and fair results of the organization, and these above were the limitations of accounting. Thank you so much for watching my video. Do subscribe the channel, hit the like button if you like the video, share it with your friends who are new to commerce or who are new to accounting. Make them feel that accounting is not that difficult, and do comment in the comment section below.